group of big banks are suing the Federal Reserve. We're talking about JPMorgan, Citigroup, Goldman Sachs are all suing the Federal Reserve, accusing them for essentially making it harder for banks to operate. This is kind of funny because it's like Jamie Dimon playing the reverse Uno card on Jerome Powell. So these big banks are required to undergo an annual stress test in order to measure how they hold up in adverse economic downturns. If they perform bad, then the Fed can require these banks to hold more money in reserves. Bigger reserves are bad for banks because that means less money to be loaned out for other activities that generate more money. I know I'm going to hear some people say that banks are greedy and they should be required to the strictest capital requirements. Yes, these capital requirements are in place for a reason, but they can't be so restricted to the point where it constrains credit. Basically, if all the money is being tied up, that leaves no money for loans for people like you and me. We also saw the Fed lower interest rates a few weeks ago, so I'm sure you saw the interest rates on your savings account drop. But I do have some good news for you. Even though you saw the interest rates on your savings account drop, I do have a list of the best high-yield savings accounts still giving 4.5% interest, which is pretty wild considering that most popular high-yield savings accounts are giving less than 4%. Marcus. So if you want a list of the best high yield savings account giving 4.5% interest, then comment the word bank and I'll send it to you directly.